Hi guys, good morning from Europe, good afternoon, good evening guys, whatever you are. 20th of October, Tuesday 2020. Piotr here is Liteforex Global YouTube channel. Let's have quick market update. As few things very interesting going on, especially when it comes to the RBA minutes, when it comes to the Brexit, or when it comes to the stimulus deal in US. Before we start, I would like to kindly remind you about the Liteforex Raffles Dream House, brand new SUV car and 18 super gadgets. The great promo, the great contest is coming to the end, 3rd of May 2021 with the quarterly prices. So, well, strongly encourage you to go and check the 15 years of Liteforex. That's from my side. Now, let's start with the Australian dollar. And as discussed yesterday ahead of the Tokio Open, that RBA could be the fuel for further move to the downside when it comes to Australian dollar. Unfortunately, it didn't. It's not working the way I've been looking for. Sorry, Australian USD. It's not working the way I've been looking for, because if you remember, we are talking about after the end of the day retest either of the weekly, but I preferred 71 to be tested and to try to trade downside from 71. Well, of course, the things related to the possible negative rates waiting here. Anyway, I'm not gonna, as you know, I'm not gonna chase the price. Still waiting for some kind of the bounce. This time, first bounce again around weekly open, all right, and the second, still the valid plan from pre-Tokyo Open. So that's how I see Australian dollar versus US dollar as a market update. Especially, I'm not gonna chase the price because I'm still fighting here on the short side and here as well. Market is trying to make that break, all right, and if that's going to happen, we are immediately opening 91.70 when it comes to Australian dollar versus Canadian dollar. So that's Australian dollar. Also, the RBNZ Orr said that, well, I'm not gonna use his words, but between the lines, that the New Zealand dollar, we might see, it's not gonna be a surprise if we are going to see closer to zero or around zero. We have very similar situation to what we discussed when it comes to the Australian dollar. Some kind of the consolidation. For some of us, it could be monster, huge head and shoulder. The question is if everyone see what we have here, if that's going to work out. Well, we will see. It's worth to wait a bit from that perspective. Today's daily open levels close to 66 as the possible aggressive entry, all right, as the possible aggressive entry. Or if we are going to get the daily close below this breakout candle, retest, continuation to the downside through the neckline, and then much lower towards 64 probably. That's how I see the Kiwi. Now, so that what happened during the Tokyo. Dovish RBA, Dovish RBNZ, we are far away from the deal when it comes to the stimulus package in US, but we are also far away from soft Brexit. Looks like we are approaching towards the hard Brexit, all right. So cable, another upper shadow, another rejection on 130, all right, or above 130. There is a possibility of building swing high. So well, we will see how it's going to play out. I would rather wait for some higher levels, maybe retest around yesterday high. Why? Because we are still above weekly open blue dashed line. We are still above quarterly open red dashed line, right? So I would like to rather sell the rallies, or I would rather wait for a daily close below retest, continuation to the downside, 27.60 as the first one, then the stops over here opening 26.50, 26.15 when it comes to the cable. Let's have a look what we have when it comes to the smaller time frame. Let's switch to the hourly chart on the cable, right? There was a today attempt to break lower, okay, during or right after the Tokio failure, so we might see attempt to going higher, and here we have 29.70, 529.80 and 130 as a possible intraday supply when it comes to the demand. Of course, levels related to the weekly open with this lower shadows from the Friday. That's how I see possible intraday setups when it comes to the cable. Of course, pound is weaker. So another solution could be the euro pound, okay? Especially that market was trying hardly to fight with 90, and since yesterday with lower shadow back above weekly open, all right, trying to finally take the advantage of the breakout of the falling trend line. So let's have a look what we have on a smaller time frame from the intraday perspective, how we can try to trade it out. So I think that the move from here to the downside, right? The move here. So levels close to 90.75, 90.60 as a possible entry levels for now. In any case, we are going to get back and close below 90.20. That's gonna maybe not cancel, but delay bullish scenario. If we can agree that that's the range, so in that case that's around 100 pips range. So first target again 92.20, 92.40. So that's what I'm gonna to look for when it comes to the euro pound. Tiny exposure on my side as well. Just guys, don't forget, you've got the link below, you can track what I'm doing live, but always do your own research, all right? That's the most important thing, that you have to do your own research. All right, euro dollar. So if we are talking that euro pound might go higher, if we are talking about some fight and possibility to go lower on the cable because of being below 130, so the thing is that euro dollar may stay neutral in between 1860 for now and weekly open around 1710. So in that case 150 pips, very nice range from the intraday perspective, but if you can see we are right now in the middle of that range, so probably it's not worth to try to chase the euro, especially that maybe let's switch here, I'm going to show you, especially that we have one pair which looks good when it comes to the euro. It's not only euro pound but also where I have it, just one second, where I have it, yeah, euro Aussie, nice big breakout finally. So what is going on here? Well, we are retest yesterday the last visible supply we discussed, so I would expect maybe at some point a little bit of the pullback. I'm looking to buy lower towards 66.50, as you can see. So this type of the pullback, then eventually going higher. How high can we go? Well, the next one is around 67.70. The next one is around above 170. So that's how I see the half year of consolidation. Nice upside break. Look for the retest. Don't try to chase the market. We will see how it's going to play out. from the intraday perspective, the 65.70 is also visible here based on the failure of this possible head and shoulders, as some were trying to trade out to the downside. All right, with that being said, guys, that was the London market update. Well, very interesting day, very interesting week. US elections getting closer. Be careful, do your own research, work with your exposure, and see you around. Take care and goodbye.